I'm Alex Makovica from inside the Nebraska Soybean Board Studios. Let's recap some factors shaping this Monday's commodity trade as we look on the boards right now. Corn trading within a penny or two of unchanged. Same with the soybeans. Wheat the leader to the downside, off about 12 cents on the day. And livestock trade, feeder cattle still leading again, trading over $2 higher. To break down factors today, we are joined by Sam Hudson with Cornbelt Marketing. Sam, first of all, tell me a little bit about the forecast coming into play. It sounds like we might start to trade weather instead of all the other headlines. Tell us more.
That's right. I mean, 'tis the season. We're going to start. We saw these early plant dates pass, and you're going to start to see a lot of field activity, at least from the central Corn Belt west. But as you mentioned, the forecast is going to start to play a little bit of a role here. And with the flooding that we'd already seen in the lower Mississippi Valley, even up into the Ohio Valley, it looks like the same area is going to be inundated with water here over the next week or so. And that could be our first reason to start talking about the supply side. As we get into May, those acreage numbers are certainly going to be of interest. And if we see any meaningful influence to deviate from that, then the market could start to pay attention. Otherwise, it's kind of a choppy entry to the week. We've got wheat lower with the prospect of some better weather in the Black Sea. And these outside markets, throwing a little bit of stability, but I don't know if a ton of certainty into the mix here. We are a little bit higher in those equity markets to start the week on some tariff exemptions, but obviously still a fluid situation and still subject to some money flow aberrations there.
Export sales last week. What stood out in your mind? How is that playing a role this week?
It's still good. That's the thing. We've been looking at solid numbers here all the way through. We're looking at solid shipments. Export inspections just came through. They beat the expectations, and were also revised higher from last week. And so this proves the USDA move last week in raising that export demand. I don't know that they can continue to raise that a bunch moving forward, but again, I think we're going to start trading more the yield and supply side of things over the next 30 to 45 days than what we have been.
All right, sounds good. Sam Hudson joining us with Cornbelt Marketing, breaking down today's trade. He'll be joining us later this afternoon on the channel Final Bell on the Rural Radio Network. If you can't tune in live, be sure to catch the podcast at ruralradionetwork.com. I'm Alex Makovica, reporting from inside the Nebraska Soybean Board Studios here on the Rural Radio Network.